All right, as 2025 starts to wrap up, the story of XRP is, well, it's a tale of two completely different worlds. On one side, it's the talk of Wall Street, with all these sophisticated financial products popping up around it. But on the other side, there's this growing debate about whether it's actually useful for everyday businesses. So what's the real story here? Let's break it all down. So we're going to dig into the two conflicting narratives that are really defining XRP's identity right now. And this isn't just about looking at price charts, It's about understanding this deep split between XRP as a hot financial asset versus XRP as a practical tool for real-world payments. First up, let's talk about the institutional side of things, because it's a story of some pretty incredible adoption. Big money, serious capital, is flowing into the XRP ecosystem in ways we've just never seen before. It really signals a new level of maturity for the market. And it all starts with this number, $1 billion. That's the total amount of assets now being managed in spot XRP exchange-traded funds, or ETFs. Now, these are basically investment funds that trade on stock exchanges just like regular stocks. Hitting $1 billion? That is an absolutely massive milestone for any digital asset. But what's really fascinating here is the story behind that billion-dollar number. This wasn't some fluke or a one-day spike. We're talking about hitting this milestone in just over a month. And it was fueled by 30 straight days of more money coming in than going out, often more than $20 million a day. That tells you this is consistent, powerful, and sustained demand from traditional investors.
And this chart just illustrates it perfectly. You can think of this as the Wall Street Marathon. Even though Solana's ETFs actually launched first, you can see right here that XRP has pulled in way more capital. It's really winning the race for institutional attention in this particular category.
Now, the ETF story is a huge piece of the puzzle, for sure. But it's not the only way that sophisticated money is getting into the game. For some investors, holding the asset directly is still a bit too volatile for their taste. And for them, a whole new pathway is opening up. And that's where this thing comes in. A NASDAQ-listed company, Vivo Power, has partnered on a $300 million fund. And what does it do? It's set up specifically to buy shares in Ripple Labs itself. This gives those more cautious, accredited investors a regulated way to get exposure to the ecosystem's success without ever having to touch the volatile token markets.
But the financialization of XRP goes even deeper. We're now seeing it being treated just like a traditional stock or bond, getting integrated into these complex, automated trading systems.
That's right. For the very first time, algorithmic trading strategies for XRP are being offered for qualified U.S. retirement accounts, things like IRAs. This is a huge step. We're talking about bringing a crypto asset into the very conservative long-term world of retirement planning.
So how does this actually work? Well, it's surprisingly simple. An investor just holds XRP in their retirement account, and then an automated algorithm takes over. It uses all these quantitative signals to manage the asset, no emotional, gut-feeling trades. The whole goal is to aim for long-term growth, which makes XRP a lot more accessible to a much more risk-averse type of investor.
Okay, so up to this point, the story sounds incredibly bullish, right? Wall Street is all in. But now we have to flip the coin and look at the other side of the story, the reality check. And this is where a major conflict emerges, right at the heart of what XRP is.
This slide frames the problem perfectly. Think about it. The very thing an investor loves, volatility, the chance for explosive growth, is the exact opposite of what a company or an employee needs when they're using XRP for something practical, like payroll. They need stability. They need predictability. So the crucial takeaway here is that this volatility isn't just some abstract idea. It's a real problem. For a company trying to pay salaries in XRP, a sudden price drop means an employee's paycheck is suddenly worth less. For the business itself, it creates this massive financial uncertainty and, frankly, opens up a minefield of regulatory and compliance risks. It's a huge headache.
And this problem is so real that companies are already actively searching for workarounds. They're looking at things like stablecoins, which are cryptos pegged to a stable asset like the US dollar, or maybe hybrid models that mix traditional money with crypto. And they're doing all of this just to avoid the core volatility of using pure XRP for something as critical as paying their people.
So all this brings us to our conclusion. We've got two very different stories happening at the exact same time, and they point to two very different futures for XRP. Let's just put them side by side. On the left, you've got the Wall Street story. Billions pouring into regulated ETFs, safe ways to get exposure through indirect funds, even sophisticated trading for retirement accounts. It's a great story.
But on the right, you have the Main Street reality. Payroll is unstable, compliance is a nightmare, and there's this fundamental need for price stability that just isn't there yet.
Ultimately, if you boil it all down, the key takeaway is this. XRP is successfully changing from being just a trader's crypto into a real, structured financial product for serious investors. And that opens up a whole new world of possibilities for it. But, and this is a big but, it doesn't magically erase the fundamental challenges it faces when it comes to practical, everyday use.
And that leaves us with the big, lingering question for the future. With this clear, dual identity, can XRP really serve two completely different masters? Can it be the volatile, high-growth asset that Wall Street wants, and at the same time, be the stable, predictable payment tool the real economy actually needs? That, right there, is the central conflict we all need to be watching.